just business news, we're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service, and I am Shraddha Babla. First, the headlines. It's a mixed start for the Asian markets as volatility remains elevated. And Cognizant reports its first ever loss after a one-time expense of $617 million, Mars an otherwise good quarter for the tech giant. Cadila, Glenmark and Torrent Pharma, the three drug makers coming out with earnings today. And Galaxy Surfactants is set to get listed on the exchanges today. Well, stocks in US closed lower on Wednesday after trading in a wide range again as investors struggled to adjust to an investment environment which is marked by both rising bond yields and signs of inflation. Let's go across to Bloomberg's Abigail Doolittle for all the updates.
It was another roller coaster day for stocks in Wednesday's Wall Street session. The Dow, S&P 500, and the Nasdaq finished lower. That's exactly how they started. But for much of the day, especially the Dow and the S&P 500 traded sharply, solidly higher. Now, the Nasdaq was down modestly for much of the trading session, but on the close, down 0.9%. The S&P 500 slid 0.5%. The Dow down fractionally. But the big takeaway is the intraday volatility, the uncertainty, the whipsaw is a continuation of what we've seen more recently with the big sell-off on Monday. Yesterday's back and forth, which ended in a rebound rally. Now, one source of pain all along has been rising rates. That was a source of pressure today as yields climbed. We did see stocks respond in a bearish way, at least on the close. We also saw some of the big high-quality names that investors were snapping up yesterday, buying the dip on. Today, those names sold off, including Apple, Amazon, Facebook, and Microsoft. That speaks to uncertainty as well. Investors not really knowing what to do with those companies where the fundamentals have not changed, but nervous to hold on to them all that long, given this macro backdrop of uncertainty. And also, the commodity complex coming into play here. The Bloomberg Commodity Index down more than 1%. Its worst day of the year, really being dragged on by oil. That's considered to be a risk asset. So all in all, we had stock sell-off at the end of the day, commodity sell-off at the end of the day. Not really a haven bid, but nonetheless a tone of volatility and uncertainty. Wednesday's Wall Street session certainly ended with a bit of a sense of risk off. In New York, Abigail Doolittle, Bloomberg News.
All right, a sense of risk off in the U.S. But now let's take a look at the Asian markets. The Asian markets have opened in the green despite softer U.S. leads. So let's go across to Bloomberg's Rosalind Chin for all the live updates. Morning, Rosalind. How do you expect today's session to be?
Well, that's the $64 million question, I think. Currently, yes, in the green, trading higher. Across most of Asia, we're seeing the MSCI Asia Pacific Index trading high by about a third of 1%. In Japan, both the Nikkei and the Tropics are making gains, more modestly than yesterday, this time yesterday, but still in the green right now. Now, we're looking at the Topics. That is up by about two-thirds of 1%. We see auto companies, electronics companies there among the biggest gainers. Now, of course, the markets had been looking, the markets in Japan had been looking rather oversold, the Topics in particular, after that worst sell-off pretty much from a couple of days ago. Corporate earnings, though, we have to remember, are still looking pretty strong in Japan. We've got about 60% of the companies which have so far reported earnings on the Topics posting results that beat analyst expectations. So that's what's been happening so far this reporting season. So there's still a lot of optimism around what corporates are doing, and of course global economic growth. So still there some level of optimism in Japan regarding what's going on those markets, and analysts saying that it does look a little bit oversold. So there could be some upside still to come on that. So Kospi is trading about 0.4% higher. Hong Kong, of course, is coming online, up just a little bit, up about a tenth of 1% right now. We're looking at Win Macau. Now, that has jumped 5.6%. It's up at this hour. It was up even higher earlier, just before the session opened. And that is after news, of course, that Steve Wynn has stepped down as CEO of that company. In Australia, though, that was trading lower. It still is. It's down by about 1/5 of 1% right now. That's pretty much one of the big exceptions. And also the Shanghai Composite, that is trading low by 1.2% at this time. And in terms of economic data, we saw some news coming up from Japan, recording the biggest current surplus in a while for December, closing at 2017 with the largest annual surplus since the global financial crisis. So that is another bit of data underlining the strong economy there coming out in Japan and in terms for global economy as well. Now, what to expect? Rather a mixed picture. We can see that there is a rebound going on right now, which is not unusual after big falls. But remember, the Lunar New Year is coming. We're going to be seeing people go off on their holidays, and therefore a drop in volumes, and that may not help the issue if we, of course, we see selling start up again. Back to you.
All right, so strong economic data in Japan lifting the Nikkei higher. But thank you for bringing us those updates, Rosalind. But what could the trading day look like back home? Well, Darshan Mehta and Agam Vakil are here to set us up for the day's trade and all that's happened in the futures and options space. Darshan, first to you, the US markets have closed in the red. The Asia markets are trading firmly in the green. What are SGX Nifty futures suggesting?
See, at this point of time, the SGX Nifty is indicating an uptick of almost 70 points at this point of time, given the fact that Europe ended sharply higher, but Asia is doing well. But I was really surprised because the Dow futures and Dow both are trading much lower. So it's still time for our markets to open almost 2 hours. So we'll watch out for the SGX Nifty, what it does. As far as the ADRs are concerned, in fact, there was a big drop that happened. Vedanta was down almost 6%, given the fact that there was this big sell-off as far as commodities was concerned on the LME. Wipro, ICICI, Tata Motors also falling in trade. So overall, ADRs were weak. What did well was counters like HDFC Bank, which was marginally in the green, but apart from it, nothing home to take about as far as ADRs are concerned. Now, the big sell-off happened yesterday as far as crude is concerned, and the weakness continues today also. So below the $66 barrel per mark as far as the Brent is concerned, and the WTI is almost at the $61 barrel per mark. So for the 5th day in a row, we've seen that crude has fallen down significantly, and US record production of oil is something that causes big sell-off. So in overnight trade, crude was down almost 2.5%. So that's the traction that's happening as far as crude is concerned. Now, if you're looking at the metal space itself, you can see that, on the LME, there was significant amount of downtick. Copper was down almost 3%. Zinc was down almost 2.3%. The big drop came in lead, which was down almost 4%. No doubt, COMEX copper has opened strong, but the commodities in China are indicating a weak start. So you can see copper is down almost 2% in China. Steel and zinc are trading down, but somehow aluminium has managed to hold on. It's trading 0.5% higher. As far as precious metals are concerned, muted in trade, gold, silver, both of them trading with minor losses that came about. So commodities as a pack is looking extremely weak today. Now, yesterday also, since the market was a little wobbly and it traded down, FIs sold in almost 1,000 crores. So because of that, their net figure for the month becomes almost a negative 350 crores. DIs were net buyers, so they bought in almost 2,400 crores in this month itself. Now, after a strong start, the Nifty ended with a negative bias, so they were selling, but somehow there was traction on the mid caps and small caps. They managed to outperform, especially the small cap, which was almost up almost 2.3%. So that was the traction that was happening as far as the companies were concerned. The underperformance came in from the IT sector, and the outperformance came in from the real estate sector. Now, as far as the Nifty is concerned, the Nifty was down almost 20 points, and the fall started post the RBI announcing it. ITC, the oil companies, HPCL and ONGC contributing on the positive side, but HDFC Bank continues to bleed and is weighing in on the Nifty, and so is TCS. But Agam, so many days of sell-off, what are we seeing on the FNOQs?
Well, Darshan, we'll have to wait and watch as to how we see the opening. But as far as the futures concerned, yesterday we saw further unwinding in terms of positions. So about 6% drop in terms of, beg your pardon, about like 0.5% drop in terms of the index. And when it comes to the Nifty Bank futures as well, we haven't really seen too much in terms of the underlying decline of 0.5%. However, what we've seen is an open interest increase of as much as 8%. Moving in terms of the India Volatility Index, that's fallen a bit, just below the mark of 20. Not too much has changed. And when it comes to the Nifty put call ratio, that too has just fallen marginally to the mark of 1. Now, in terms of changes in open interest, what we are witnessing is more writing around the 10,700, 800 and 11,000 calls and a little more writing at the 10,000 put. But moving in, we do have GMR Infra, which moves into the band. And we're watching out for stocks such as Voltas, which has made fresh longs. We've also seen fresh longs in other counters like Dish TV. On the other hand, weakness sets in on PC Jeweler, where the stock down as much as 3% and shorts building up there. That said, once again, all eyes on the benchmark indices and what they do in today's day of trade.
Thank you, Agam and Darshan. We will be watching out for those aspects. But amongst the key events yesterday, the Monetary Policy Committee has kept interest rates unchanged while maintaining a neutral stance on the economy. And now 5 out of the 6 MPC members voted for a status quo on the rates. The committee, however, has raised the red flag on inflation, highlighting 6 key risks. Now, this stance also indicates that a rate hike in the next fiscal cannot be ruled out. Ira Dugal sums up the key highlights from the RBI policy decision in this report.
The Monetary Policy Committee left interest rates unchanged at 6%. The committee voted 5-1 in favor of a status quo on interest rates. Michael Patra, Executive Director of the RBI, voted for a rate hike. That's the first vote for a rate hike that we have seen in this cycle. The headlines, though, came not from the decision, but from the policy statement and the press conference after that. Important comments on inflation. Even though the MPC has maintained a neutral stance in its statement, they've highlighted 6 upside risks to inflation. Among them, the impact of HRA, that's house rent and allowance increases, which is already playing out through the system, the impact of stronger global growth and consequently higher commodity prices. Then, of course, the budget impacts start to come in. So on number 3, they talk about the fact that the proposed MSP policy could have an inflationary impact, but they said they need to watch how that plays out. They also said that the hike of customs duty on a number of items could have some inflationary bearing. And then finally, they say that the fiscal slippage as indicated by the union budget could impinge on the inflation outlook. Fairly strong statement, not just in the policy, but from Governor Urjit Patel in the press conference on the government's fiscal path. He said that there has been a slippage on the fiscal consolidation path on 3 fronts. You missed the fiscal deficit target for last year, that's the current year, that's FY18. You're doing a fiscal deficit of 3.3%, which is higher than what was anticipated for FY19, and you have pushed back the 3% fiscal deficit target all the way to FY21. When asked whether he thinks this will have a bearing on the MPC's ability to meet its 4% inflation target, he sort of balanced out his answer, saying it certainly makes their task a little bit more challenging. But he said that perhaps that 3% number may have changed between 2014 when it was first talked about as a precondition to now. So that's the inflation and fiscal story that came through. Apart from that, on growth, the MPC is sounding relatively comfortable that things are shaping up as expected. So they talk about growth picking up to 7.2% GVA growth in the next fiscal, that's FY19. They say that there is some signs of a pickup that is emerging on the investment side, and you can judge that from stronger credit growth, but also better order books of capital goods companies. They also continue to believe that the recapitalization of banks and the insolvency process will aid growth once it's sorted out. A little bit of a googly coming in from the governor at the press conference, where he talked about the taxes that are being imposed on capital and capital raising, perhaps hinting at the long-term capital gains that has been added to those taxes, saying that that could have a bearing on the investment to GDP rate and could perhaps impact a pickup in that investment to GDP rate. So interesting comment coming in there as well. On liquidity, which was the prime focus of the markets, again, important comment coming in from Viral Acharya, this time the Deputy Governor of the Reserve Bank of India, saying that the RBI's idea behind liquidity management is to manage the needs of the economy. And the RBI's goal, except in exceptional circumstances, is not to manage asset prices in any one asset market. He was, of course, talking about the bond markets where yields have gone up, partly because of concerns on inflation, global yields going up, but also fiscal pressures which have hit the market. So the undertone of that message perhaps was that we are not the problem that has pushed up yields. The problem lies elsewhere. In particular, perhaps one part of the problem lies in New Delhi, and that the RBI should not be expected to manage it, because as things stand at a system level, liquidity is still surplus, moving towards neutral.
Sajid Chinoy, the chief India economist at JP Morgan, says that the RBI believes that inflation is not a cause for alarm as yet. However, he says that the RBI could offer monetary tightening later this year if the variables impacting inflation move in a certain way.
What the RBI is saying is we see inflation around 4.5 or 4.6%. That is not a cause for alarm, which is why they've kept their stance neutral. Now, remember, this is an inflation targeting central bank. So ultimately what matters is where do they see inflation going? Everything else, the currency, the fiscal deficit, minimum support prices, these are all ingredients. So as of now, I think the central bank doesn't seem alarmed, but I would say 2 or 3 key sources of uncertainty which could push that second half inflation higher if oil prices stay close to 70, if the rupee were to weaken, and if minimum support prices went up. I think right now the RBI is saying is we can't be making policy based on that uncertainty. If these variables move in a way that the second half inflation forecast were to go consistently above 5%, then one cannot rule out monetary tightening later in the year. As of now, they're saying is that's not our baseline view, and so it's not a given that interest rates have to go up anytime soon.
All right, let's shift our focus from the currency markets to commodity markets, and Jayesh Khilani is joining us with all the updates. Morning, Jayesh. It did not really end well for commodities on LME yesterday, at least.
Morning, Shraddha. Not only base metals, but all things commodities are looking down as far as overnight prices are concerned, and some of the cues that we are picking up early morning in Asia as well. Starting off with oil prices, that actually posted a biggest loss in over 2 months. Both WTI and Brent declined more than 2% each, and we are seeing negative trading bias in early Asian hours as well. Primary reason for this was the weekly output, which was declared overnight. That came in at more than 10 million barrels for a day for the first time in history. So that's the negative for oil prices, and on account of this, the oil market volatility has now jumped to the highest level since November last year. As far as the base metal and the precious metal space is concerned, the primary factor that actually weighed in on both of these was the dollar index, which has shown some strength for the past 5 days. So on account of that, gold corrected as much as 1% for the first time since 7th December. Even the base metal space, the LME base metal index declined more than 2%. That was the most since December last year as well. Nickel, which was the top loser, lost more than 4%. That was the most since September last year. Copper was down nearly 3%. Zinc was down over 2%. And other base metals like aluminium, lead, and tin ended lower on LME. Now, similar action can be seen in the Shanghai Futures Exchange, except for aluminium, which has opened with a positive bias.
All right. Thank you, Jayesh. We could see some weakness in some of the metal names today. Do remember that. But while markets may be seeing some correction, public offers and listings continue on Dalal Street. Now, the latest kid on the block, which is Galaxy Surfactants, has raised 937 crores at rupees 1,480 per share in its IPO. Now, the company will list on the bourses today, and Sumit Sarkar is standing by with the possible valuation on listing. Sumit, this one had a solid subscription though.
Yes, it had. It was subscribed nearly 20 times, with most of the demand coming in from the QIB portion. The QIB portion was subscribed 54 times, while HNI was subscribed nearly 7 times and retail close to 6 times. So if you see, the street is expecting a premium of close to 70 rupees per share. That is a listing gain of 5%. So let's see how the valuations and how the market cap first would look like if the stock lists as a premium. Now, at the issue price of 1,480, the market capitalization of the company would be close to 5,200 crore rupees. Now, if it lists at a premium of close to 1,550, then the market cap would be close to 5,500 crore rupees. And if it lists at 1,600 rupees, then the market capitalization would be close to 5,700 crore rupees. So let's see how the valuations would stack up on listing. At 1,550, the PE would be close to 36.6 times, market cap to sales would be 2.3 times. EV to EBITDA would be 21 times, while price to book would be 8.7 times. And at 1,600 rupees, the PE would be 37.7 times, market cap to sales would be 2.4. EV to EBITDA would be 21.5, and price to book would be 8.9. Now, if you see, Galaxy Surfactants is a leading manufacturer of surfactants, which is used as a raw material in personal hygiene and sanitation product, and also it manufactures special ingredients which is used in fairness screens, sunscreens, etc. Now the company generates most of its revenue by selling surfactants. It gets around 67% of its revenue by selling surfactants, but going forward it is increasing focus on specialty ingredient products as they provide high margin to the company. The company sells its product in 70 countries and generates nearly 65% of its revenue from overseas. Now it gets 45% from Africa, Middle East and Turkey, while it gets only 35% from India and the remaining 20% from rest of the world. Now if you see, the company's major clients include Kevin Cake, Dabur, Henkel, Himalaya, Jyoti, PNG, there's Unilever, and the top 10 clients of the company contribute nearly 59% to the company's top line in the first half of financial year 2018. Now, the company has around 7 manufacturing facilities, of which 5 are in India while 2 are in overseas market, and the average capacity utilization of these 7 manufacturing facilities for the first half of financial year 2018 stood at 62.5%. Now, if you see, there are no listed peer which is purely in manufacturing of surfactants, but there are few players who manufacture them, which includes Godrej Industries, India Glycols, Aarti Industries, but the contribution coming in from surfactants to their top line is very small, so they are not pure listed peer of Galaxy Surfactants. Now if you see Galaxy Surfactants financials, its a revenue, net profit and EBITDA grew at a CAGR of 8.4%, 24.4% and 7.5% over FY14 to FY17. Now the reason behind the double-digit growth of in net profit is that the company has been able to reduce its debt and interest burden over a period of time. Now if you see the company's return ratios, they were also healthy. Return on equity stood at 24%, return on capital employed at 30% and return on asset at 11.4% as of FY18.
All right, thanks Somit. With that, we move on to the stock of the day. Excel Industries has posted a strong third quarter earnings, and Nikki Mirchandani is joining us with the details. Morning Nikki, what has worked for this company?
Hi Shraddha, good set of numbers reported by the company. If you look at the top line growth, we are looking at a number of 60% year-on-year growth at a number of around 147 odd crore. If you look at the profitability, we're looking at a close to 19-fold jump there. The number has come at 19.6 as compared to nearly 1.2 crore that we've seen in the December quarter of the previous year. Operational profit has been efficient enough for this company, 6-fold jump that we're looking at a number of around 32 odd crore as compared to nearly 4.9 crore that we've seen in the corresponding quarter. Margins have shot up to 21.6% as compared to nearly 5.3% in the corresponding quarter. What has led to good set of numbers? Well, cost optimization and higher revenues. Now your employee expenses as a percent to your net sales has come down to 44% from 50% earlier. Also, other expenses have declined. Along with that, finance cost, which has come down by nearly 12% year-on-year basis, combined with your operational efficiency, has led to beat on the bottom line front. This is despite the fact that the other income for this company has come down significantly, more than 90% on year-on-year basis. In terms of segmental breakup, major revenue is coming in from chemical business, which occupies 96% of your overall revenue and has posted a good 13% year-on-year growth. On EBIT front, this particular division also forms 97% of your overall EBIT and has grown by multifold in this quarter.
All right, thank you, Nikki. We will be watching out for Excel Industries today. But continuing with earnings, US-based IT major Cognizant has managed to grow its December quarter revenues faster than estimated, but a one-time expense due to a change in US tax policy has hit profitability. Now, the company reported a loss of 80 million in the fourth quarter from a 416 million profit in the year-ago quarter. Revenues grew by 10.5% to $3.83 billion in the fourth quarter of 2017 from $3.46 billion in the year-ago period. So keep an eye out for IT majors in trade today as well. But amongst the other stocks that you should watch out for include Sun Pharma. Now this is on the back of its subsidiary Taro having reported a weak set of numbers where net sales were down 30% to $155 million on account of higher competition and difficult pricing environment. Net profit was down by as much as 87% to $18 million, and operating income also saw a sharp cut of about 52%, with margins seeing a sharp fall to 39.9%. You also have FDC Limited, which has approved a buyback of shares at the price of 350 per share as compared to the closing price of 254, and promoters will also participate in the proposed buyback. You also have Uttam Galva Steels, which has said that ArcelorMittal has transferred 29.1% stake in Uttam Galva Steels to the founders. Another ET report talks about IDBI Bank and Federal Bank, both of which will be in news on the back of the reports that Manulife has been leading the race to buy IDBI Federal Life Insurance, and it could pay close to $550 to $650 million to acquire a controlling stake. And lastly, on the back of bulk deals, you could also see some reaction on Shankara Building Products, where Akash Prakash's Amansa Holding Private Limited bought 1.7% stake in the company yesterday, while smaller cap World Fund Inc. has sold about 1.8%. Well, Mahindra Group and Piramal Group have expressed interest in buying the whole of parcels of Sahara Group's Ambi Valley project. Now, the project is under liquidation to recover investors' funds from the Subrata Roy-led conglomerate. Now, the lawyer for the official liquidator confirmed the development and said that the parties are doing due diligence. The Supreme Court allowed the sale of Ambi Valley in parcels after the official liquidator told the top court that selling the whole property would be difficult. Now, a bench which is headed by Chief Justice of India, Justice Deepak Mishra, had earlier warned the Sahara Group that it may be held liable for contempt, and its chief Subrata Roy may be sent to jail again if it obstructs the auction process. And while electric vehicles stole the show on day one, there are a few offerings that managed to catch the eye for more than just their swanky looks. Now, Ayush Ailavadi and Alex Matthew get us a sneak peek into some of the most innovative models on day one of the Auto Expo.
Ayush and I have spent a day at the Auto Expo. It's been busy. There have been several launches. We can't tell you about all of them, but we can tell you about some of the coolest concepts here. The one behind me, of course, is the first launch that Maruti Suzuki did today, and that's the design philosophy that it intends to employ from here on out. What Ayush is standing with is perhaps what's more interesting between the two, and I'm going to let him tell you all about it. Ayush?
Definitely the more interesting of the two, because if you're adventurous and you like off-roading, well, then Maruti Suzuki thinks at this Auto Expo that the future is all about FACE. Alex, it's four-wheel drive, autonomous, connected and electric. Isn't that the theme?
Absolutely. Electric is what everyone's talking about. I can't imagine what an electric car would look like climbing up the face of a mountain.
And that's what this car can do. If this car was, well, from dreams to reality, if it actually made that transformation, well, you can actually switch and actually move from automatic to manual with the touch of the screen we're going to show you. Those are massive wheels for an off-roading experience. And have a look at that screen, Alex. That's out from straight out of a Star Wars or Star Trek movie there.
And don't miss the crystal ball. apparently that can connect all of your devices. It can do a lot of other things with regard to media over there. I don't know exactly what it's going to do, but it does look interesting.
It is. This is definitely one for the future. And well, the Jetsons and all those fancy futuristic movies and cartoons are not too far away, and it's not just here. There's a lot more to show you.
This vehicle is one of two that were showcased by Tata Motors today as concepts. This one is derived from the D8 of the Jaguar Land Rover.
Sounds interesting. The car looks fantastic. We can only hope the concept, well, is a lot like the real thing, and the real thing is a lot like the concept, but it looks spacious on the inside. We'll take you for a quick, well, walkabout. Massive tires. Alex?
So,
I take your point. I take your point now.
You know, essentially, this is what is called the Omega platform. The other one that they showcased is the Alpha platform.
That is for a much smaller car.
Yes. So the Omega platform essentially is going to be what the SUVs that they develop over the course of the next couple of years will be based on.
And this really showcases that finally, something we've all been waiting for, JLR and Tata, well, the synergies are showing in design and the product.
Design philosophy as well.
Well, there's more, and we're going to take you now to a race car, Alex. That, well, Formula E engine in that Batmobile-like car, well, should we take a ride in it?
I don't think they're going to let us take a ride in it. I was just going to say it looks like it's come out straight from a movie, Ayush.
It has, Alex. And I think, well, we missed that bus, but just to let them know what we've all missed out on, 0 to 100 in what? 4 seconds? 360 horsepower.
I can only imagine how fast it goes.
And all electric.
I don't know. I can barely imagine how fast that would go, but then, look, that's what it's all about. It's a dream.
The Renault Trezor.
It's a concept.
The Renault Trezor is a concept. I wanted to add that as well. And well, it is a dream. And well, we thought we'd live the dream, but now what we'll have to do is hitch a ride and get back home.
Well, with that, it's end to this session of Daybreak. All you need to know is up next. Stay tuned to Bloomberg Quint.